We are live. So happy Thursday, everybody. Welcome, welcome, welcome to Ignite. We have another masterclass. I'm so excited with none other than Miss Demetris Curry. I don't know if you guys caught last week, but if you missed it, you need to go back and watch the replay because she basically set the tone for all of the nuggets that she's about to share with us. Y'all, all of those best kept secrets, which were not so best kept for us, we pulling the veil back and we telling it all. So without further ado, I am turning this over to Miss Demetris Curry so that she can tell us everything that we need to know about KeyMan policies. Make sure that you go ahead and like and share. Make sure that you tell your friends, your family, your colleagues. This is absolutely one episode, especially for those of you guys that are business owners, entrepreneurs, and nonprofit leaders. You do not want to miss this special presentation on key man policies. All right, Demetris, the mic is yours.
Thank you so much, Torin. It is amazing to work again with you guys. This is going to be a phenomenal month. So I am so excited that we had the chance to even pull this together, right? So as of last week, if you missed it, like Torin mentioned before, make sure you go back and watch the session that we did on term policies versus permanent insurance, because that's going to set the tone for what we're talking about today, which is key man policies and key person policies, aka key person policies. What is a key person policy? So we're going to actually go ahead and jump on in because I have some information here that I really, really want to share. I want to make sure that everyone is able to see my screen. Welcome, Ignite, Ignite, Ignite. How wonderful is that? And what I love about the key man policies is that it allows us the opportunity to move forward in our business, to move forward in our business. So over the next 4 weeks, we have, this is week 2 of 5 weeks. So we have a few more weeks to go. Key man policies is what we're covering right now, also known as key person policies. This is brought to you by Ignite, SBDC, and the University of Alabama. So we are excited to bring this forth to you. Are you in business? Are you in small business? Or are you a corporation? No matter how big or small you are, this information can be vital in making sure that your company is moving to the next level and basically securing your future. And so that's why we want to talk about that. So we talked about term and permanent coverage. We got past that. Let's do a quick recap, okay? The quick recap is traditional way of insurance is on the side of the house where you're trying to just really leave money behind to your families, right? There's also another side of the house of this insurance, what we call the Wall Street approach, okay? The Wall Street approach. And that is more so on the side of the house of actually doing more cash value versus insurance, okay, where you leave money just behind, where you're able to use the policy as you are here living on this earth, running your business, running your household, day-to-day living. That's when you're able to use those particular type of policies, okay? So we want to make sure that you are aware that you can do that. You can actually do that. We also covered and we learned some history of the S&P 500 in relation to index-like policies and insurance. We talked about the green line versus the red line. The green line indicating more of a stable growth and a floor built into your coverage where you're able to basically protect yourself from an inflation or a recession market, right? We talked about that. We learned about that as well. And then we also learned what the red line represents, such as stocks, mutual funds, and things of that nature. We're not teaching on the market strategy. We just want you to see the difference between what these type of strategies could do for you in your business, okay? All right, so let's look at what else does insurance provide. We also learned risk management, cash accumulation, advanced market retirement building, generational wealth here, key person, which is what we're going to zone in on today, and then also commercial loan collateral. Okay. Yes, we will be talking about how to use your insurance policy for a commercial loan coverage collateral. It can be done. Key person replacing the irreplaceable. That's what we're going to zone in on today. So, what does that mean? Why are we talking about life insurance in conjunction to business strategy, particularly the KeyMan strategy, right? The KeyMan strategy, this is what it means. In general, it means that a company is able to take out insurance and cover themselves on the death of a possible person that's vital for their organization to sustain itself. So that could be a CEO, a VP of operations, possibly your general managers, okay? Maybe your business partner. Maybe you have a business partner within your organization and they handle a particular part of the dealings of the company. If something was to happen to them where they either pass or leave, then you need something in place that can help you sustain your business where you're able to get in on that information, get in on that and say, hey, I want some of that cash value. I want to be able to pull some of the death benefit off in the event that something was to happen or they were to die or trauma of succession. That is so important that you have that in your ability to get her move forward. Okay. So that is where we are. And we're going to talk more about that and how to utilize that in your company, right? Replacing in people that are not replaceable. There are some times when you work with a business partner that they handle majority of all the areas of maybe technology. They may handle all of the relationships with the clients, things of that nature. They are a key component. And so this is when this particular type of policy comes into play, right? Losses that you could incur, reduce company productivity, huge loss that you can sustain there, right? Time and dollars needed to find, hire, train, and replace a person that you just lost in your business is why a key man or a key person policy could be vital for you. Okay. Like other tangible assets, businesses need to make sure they protect themselves from those type of losses. Okay. So we're going to talk about that in greater detail. Now, what are people saying? What are financial advisors and Forbes and the PWCs and the RS? What are they saying about a key person, key man policy? Okay. What I learned even in this process is that it is still a growing industry, okay, of having coverage for your company. Just 18% of family businesses say that a robust succession plan has not been received. They do not have one in place. They need one in place. And this is as of the PWC Family Business Surveys in 2019. They have actually looked at strong businesses, partnerships, and still there are family owned businesses within itself that do not have something in place to make sure that if someone was to pass in their business, let it be a business partner, a spouse, or someone that is vital in that particular business to make sure that it can sustain to the next generation, right? So it is very much looked at in areas like Forbes magazine and entrepreneurs and things like that. Two reasons why this happened. Two reasons. And it's easy to understand. You are busy trying to make sure that your company is what? Making right now income. Your right now energy, your foot down on the pavement is trying to make sure that you are keeping your business afloat, that you're growing, that products are coming out of your business, and that you just didn't have time to look at it, or you hadn't considered that you need to have something in place for 5 to 10 years down the road to make sure that while you're climbing that ladder to success, that you're able to still sustain yourself in the event that you were to lose someone vitally important, right? So how do you make the determination of who's key in your business? How do you make that determination? Do you know if that general manager is really considered to be a key, quote unquote, component to your business doing what it needs to do, right? The success of your business, you have to look at growth. Are you growing? Do you intend on franchising? Do you intend on expanding? Is this person helping you move in that direction? If the information and the energy that they bring forth in your business is really what's helping you propel to the next level. If that's a person that's in your business and you consider them as being vital, that's a great example of a key person or a key man in your business. How about critical producers? Okay. How about those people that are front line with your clients, right? The people that have built the relationships with your clients. Those are also examples of key person people that are making a huge business difference for you and making the wheels continue to turn to the next level, right? So that's how you determine how much you need to be considering this, and if that person is really a vital component in your business. The roles, here are some other areas. Someone that may have a high salary in your business, such as a VP of operations, a CEO, right? Those are people that have higher salaries in there. The decision makers, possibly board members, right? When you have board members that are making decisions to help propel your particular business, and maybe they have some area of expertise that's just hard to come by, right? Definitely a vital person to put into that, right? So those are some areas of what to look into. The answers are in the numbers, okay? How do you tell if that person is going to be it? Well, let's look at what it would happen in your business in the event that they're no longer there. If they're no longer there and they have either moved on to another company, maybe they have passed and they've passed, died or some way, that kind of thing. That's how you can tell if something's going to happen. What do you do to make sure that you replace that person and you have the money to do so? That you have the money to go in and find another person to replace the irreplaceable. Okay, to replace the irreplaceable. So, how do you do that? Let's look at some of these guidelines that you can use to help you do that. Multiple all the compensation. Let's look at all the compensation. Annual compensation multiplied by a factor of how much difficulty the business will be in if you cannot replace that particular person, right? How much would you lose in sales? How much would you lose in customer relations? How much would you lose in being able to get new contracts? Are those things vitally important to making your business continue to run? If that person has their hands in your business to that degree, it could be a business partner or whatever. If that's the case, that's how you determine, okay, I may need to have this amount of money in the event that this person leaves, or that amount of money, right? That's what we're talking about today. Contribution to profits, right? How are they contributing to the business? Are they contributing in such a way where if they are not there, things are going to fall apart, right? That's what you need to be coming into a reality with. Is that really the case for your business structure? Because let's be real, some business structures do not need a key person policy, all right? Some of them do not. If you are a sole proprietor and you are the main person that handles everything, I mean, you're the person that makes everything run, right? You're the main person, and you don't have any indication that you want to move forward or push this to another generation, or you just want to do it for your one generation. You don't want to pass it to any children. You don't want to pass it to any other business partners or anything of that nature. You just want to, you're just enjoying the ride right now. This is not really something that you're trying to sustain for many years. then this may not be a good fit for you, right? This is for business owners, organizations, franchises, nonprofit organizations. These are for organizations that are trying to maintain and sustain a company that they have built from the ground up. Maybe they have actually bought out from another company, right? And they want to make sure that it lasts, that even if someone comes and goes, that it lasts and they can move it to the next generation. They can pass it to the next business person or possibly build it to a point where they can sell it off, right? All of that is part of the strategy, the business strategy of why you would want to consider a key person policy. Okay, so let's look at the numbers. Yes, I'm a big numbers person, so I'm like, let's look at some numbers here. All right, so we're going to actually pull up some numbers that I pulled out for you as an example. Okay, and on this particular example here, I want you guys to see some of the things that you can do in this type of policy. Okay, in this type of policy. And on this particular policy, we're going to look at this John Doe account, right? This is John Doe. John Doe is 51 years old, a tobacco non-user, and we are looking at a KeyMan policy. Now, I have blacked out all the information on which carriers this is with because I'm able to look at multiple carriers in the industry. So we didn't want to push any particular carrier. This is for educational purposes only. Okay, for educational purposes only. So we're not pushing any particular carrier on this information. Just is for you to just know what we're looking at, okay? But this is a great example of a business owning a policy on a key person in their company, okay? So let's just say that Mr. John Doe is a VP of operations, okay? VP of operations. And the company wants to put something into place. They will be the owner of this policy. So let's just say that the ABC network, okay? Let's just pull that together. We can say any network or maybe any company, John Doe's company, right? They own this policy on him. John Doe is the insured, okay? He is the person that is being insured on this policy. The beneficiary is the company. The company will receive the benefits of the death benefit in the event that something was to happen to Mr. John Doe and he was to pass. So in this example here, we're looking at 51-year-old John Doe. In 1 year, he'll be 52 years old, right? In 1 year, he'll be 52 years old. Now, keep in mind that they're going to pay $500 a month on this particular policy, right? $500 a month on this policy. Now, they're doing $500 a month on this policy, but as they're doing $500 a month on this policy, okay, they are deciding what they want to pay on this policy. Now, you can customize a key person policy and a key man policy to be any amount of premium that your company is willing to pay for on this person. So let's say, for instance, that they say, I have a $200 budget. Well, I have a $1,000 budget, or I have a $5,000 budget, whatever it is that they are willing to pay on a month-to-month basis or an annual basis, right? Then this is what you're seeing here in this section, all right? So I'm using this example of a $500 a month example, okay? Know that this can be customized any way the organization requests. Times 12, which is 12 payments in a year. This is on a monthly right here, $6,000 annual premium, all right? Now, one thing you want to consider is that when you are doing a premium pay and to this particular type of policy, there are things and guidelines that your agent that's customized in key person and key man policies, right? They will be aware of something we call MEC limits. MEC limits, modified endowment contract, is what that stands for, okay? On a modified endowment contract, what that means is that you can put a certain amount of money into a policy and still stay within IRS guidelines without going over what they require in taxes, okay? That's a whole nother discussion. If you are working with an agent or maybe someone that specializes in key person or key man policies, that is a discussion you definitely want to have with your agent as far as whether they have considered the MEC limits in your policy. When I work with agents and I work with corporations, we always have that discussion on day one of what we can and cannot do to keep them within MEC limits of the IRS, because this is something that you can do as a corporation and stay within those guidelines and not be in such an area of MEC limits with the IRS. But we'll talk about that on a different day. Now, what this means is that $382,000, that is within the MEC limit that the IRS has set at a $500 a month premium, okay? If it was a $1,000 a month premium or even a $200 a month premium, this amount here would be different, okay? So that's why I want to bring that out. Just a little pin in that there, just a little more information. So back to this. So we have $500 a month premium here at $382,000 death benefit. What does that mean? That means, number one, if the insured, VP, CEO, general manager, whoever you're putting this insurance on from your company, was to pass or was to die, right, they will receive $382,000 to that company, okay? What would the company use this for? They would use it for what? Continuing their business operations, bringing in a replacement of the irreplaceable, okay? Perhaps making sure that their productivity does not get affected. Make sure that they're able to pay someone else coming in possibly a good salary to stay with them, right? That's what you would use these type of funds for. Now, you can do a key person policy or a key man policy either with what? A term or a permanent policy. Today, we are talking about a permanent policy. You can do exactly the same structure using a term policy, okay? And the reason why we want to make sure that you are aware of what you can do, okay, is because you're able to move forward and use this in the event of a death benefit, okay? And use it in the place of a death benefit, all right? Now, the one thing that you also have to keep in mind is this. If you are wanting to access the cash on this particular policy, right? If you need to access the cash as a company and as a corporation, you can still do so when it is a permanent policy. If it's a term policy, you can only use that money in the event if that person was to die, okay? However, in this case, we're looking at a permanent policy, so the company has access to not only the death benefit if they were to pass, but also the account value, cash value, while that person is yet living. So this is why we're going through this information here, because I want you to see that if you are to put a key person policy on someone in your organization, what would that look like at this range? Now, of course, we can always customize to be a different amount. And those amounts here would be different because a portion of your premium payment pays for not just the death benefit, but the remainder falls into your cash bucket, what we call an account value bucket. Okay? So this is some of the things that you can do with your policy. I wanted you to look at this illustration because it will give you a visual of the numbers, right? There's also something you want to consider this. If you were to loan against the policy, in which you can, You can loan against the policy, and that's really important to say loan and lien against the policy, where you're able to take loans against the policy on a non-taxable event. That is something else that we also need to discuss with your tax accountant or your CPA. But you definitely can pull cash, this money here, off of your policy, okay, with a non-tax lien against your insurance policy. So let's just say that down the road, you decide, I want to expand my business. I want to expand my business and I'm ready to expand. What do I do? Well, this is what you're going to do. You are going to call your agent, or you're going to call the company that's carrying your policy, and you're going to say, hey, I have cash available to me on this particular policy, and I want to go ahead and pull off what? This is an 11 year 11. I want to pull off that $37,000. I want to use it to buy more equipment. I want to use it to do this. I want to use it to do that within your organization. There's no limitations on what the company can do with the cash value that has added onto this policy. But keep in mind that as you do that, you can put the money back on the policy once profitability is there. So it does not affect your bottom line if anything was to happen to the person you have that insurance on in the death benefit category. No, I know that is a lot of information, but I wanted to make sure that we had the opportunity to talk numbers. Let's just say that that key person is you. Okay, let's say that key person is you and the insurance is on you, and you have a business partner, right? You have a business partner. That business partner has said, hey, if anything was to happen to you, I want to make sure that I can still maintain the business. Let's just say it's a mom and a son, or a son and a father, then something was to happen to the dad. Okay, you got the insurance on the dad, owned by the company that both of you are running. And then the son, who is younger in years, he's going to take it over and keep on moving with it. Now he has these funds that's payable to the company, death benefit wise, to help sustain the business, right? And to also help bring in someone to help him run the business, right? So very important that we have those discussions and that you start looking at the numbers and what it can do for you in your business. Does this make sense for you? Would it make sense for you? Okay. Now, there are some areas of these type of policies that you also want to keep in mind. The one area that I always like to point out day one is the surrender charge section. Okay. The surrender charge section here, this is the first 10 years of a policy, and most carriers all have that 10-year surrender area, okay? But that 10-year surrender area, basically what it means, it doesn't mean that you can't take cash off of it for the first 10 years. It's saying don't close the account, right? So you have the opportunity to still access the account value section in the first 10 years, but you don't want to close the account because that's when the first 10 years of surrender charges kicks in. So, because what that would do is they would take that from the value before they give it to you. So let's just say that you close it in year 10 or so, right? All right, $31,000 is sitting in cash. What they're going to do is they're going to take $1,200 from that because the surrender charge has not dropped off as of yet until year 11. And then they give you the difference of the cash of the $30,177, right? So what you want to do is, for longevity, you want to try to make sure that you are able to keep this policy past the 10-year surrender period, right? So this has been one of the types of policies that I love to work with corporations, especially if we're working on business strategies, possibly scaling to some degree, or even if they're considering expansion. right? So they're going to open up different locations, or possibly they want to sell off a part of their business and then have that key person come in and run that section of the business while they concentrate on other areas. These are some of the things that we do as agents and wealth building strategists to work with them in those areas of concern. Okay. All right. So I want to see, let's see if we can go back to Miss Torin. Torin, are you there? Can you actually see and hear me? I think her line is dropped. So let's keep moving. Let's keep moving. I think that we're actually still together, but her line has dropped. So she'll get back online with us in just a moment. Yes, there she is. Okay, okay. So her line has dropped, but that's okay. We will get back to where we were in our discussion. So she'll get back to us in just a few minutes. So how are these policies structured? Okay. So with the taxes, a key person policy, look, you can actually do it in any way that you would like to do it. It is so a big customizable type product, huge in customizing, okay? And so we know that the business is the owner of the policy, okay? Business is the owner of the policy. And then also the applicant is what? The owner, okay? So you would be the owner of that policy. All right. And who is the insured? The insured is the key person. The insured is the key person. That's the CEO, the VP, those people, right? And then we need to also figure out who's going to be the beneficiary. Easy. It is the business. The business is the beneficiary of this policy. Now, premiums are not income tax deductible, okay? Because you want to make sure that you stay within guidelines of the IRS. Make sure that you go to the irs.gov website. Here's some added information here at the very, very bottom on making sure that your employer-owned life insurance are meeting all the standards that needs to be met, okay? And then also, we need to also look at what you're planning to do with that business. Is this going to be the area that's going to make or break your sustainability? Or do you have other things in place? Do you have other things in place to run this business? If not, then how about creating a strategy or a place that you can pull this together with your agent, or you can work with the Ignite Alabama team to do so, right? They do have the Ignite Alabama team that's helping and making sure that you're able to do a key person policy and to make sure you get that training that you need to get all of that in place for your organization, okay? So this is going to be something that we are going to work on as we pull things together. So would your company benefit from a key man policy? We just talked about and we learned what a key man policy is all about. Can you actually use it in your business structure? Okay. And in using it in your business structure, does it make sense for you? Okay. Does it make sense for you? And that's going to be real talk right there, because what you don't want to do is to get into a position where you're not able to really sustain the policy. You want your company to be able to make those premiums on whatever amount that you set forth, to make sure if something was to happen to that key person or that general manager and they leave you, that you're able to move forward and that you're able to continue on. All right. All of that is going to be so important in trying to sustain a business, right? Trying to sustain a business. And that is going to be also important if you can pass it on to your new business partners, or possibly your current business partners that you want to keep it in the event that you had to move on. Okay. Now, do you have business partners, family owned, or a business that may continue if those critical people are not there with you anymore, right? Do you have that together? Are those people now with you? Are they able to move to the next level with you, or are they going to end up leaving? If that's the case, if they're going to end up leaving and their mind is sort of like, I'm not really sure if I'm going to be able to stay with you, I'm considering it. Okay, so this is when you want to start thinking about, okay, longevity and sustainability. Okay, what other options do you have in place to sustain your business? If you do not have any other options in place and you really, really want to maintain your business, then this is the area that you may want to consider. Sit down with your insurance agent, sit down with your business strategist, also sit down with maybe a planner that's been helping you with, scaling your business. That is so important to have that in your in your bag. It's so important to have that in your bag, right there with you at all times. What is the vision for your business, big or small? Big or small? This is one of the things that I love to work with companies on, because I work with companies whether they're small or if they're a huge corporation, right? So when you're working with them and they're telling you where they are, where they've been, the struggles of how they got started, how long it took for them to build their business, all of that comes into play, right? All of that comes into play when you're like, oh my God, I don't work all these years to bring my business forth. And I do not want to just, let it fall by the wayside because my VP decided to move on, right? Yes, that's what I'm talking about, of not being able to move on and not being able to grow your business anymore because that key person had a different vision in their lives and they decided that they wanted to move to a different area of their life. That happens. So even in a key person policy, they don't have to die to use it. That's why I love it so much. They don't have to die to use it. You can actually access the cash in these permanent policies. Like I told you, if you structure it as a term, then they have to pass to use it, right? But if you structure it as a permanent policy, what? You can access the cash that's built into that policy, and you can say, you know what? I want to use that $100,000 that I built up in 20 years. I want to use that $10,000 that built up in 5 years. I want to use it to buy some more equipment. I want to use it to bring on another general manager. I want to use it to do such and such. Oh, I get so excited. I got chill bumps. Did y'all see that? I got chill bumps.
We don't see it, but we're excited too. We're excited too. This is absolutely unbelievable. And I've been watching in the actual Facebook Live, and we don't have any questions right now. So that means that you have done an amazing job in them actually in presenting the information. So they really understand. And so my question for you is next steps. How do they connect with you or a member of your team if they really want to understand more on how to do this and where they go from here?
Well, Taryn, I would love for them to actually work with us and go to your link. Okay. There is a link that we've created for you specifically if they need some additional guidance. And I'm going to share that.
Okay. And we actually posted that last week, and we will post it again in this one. Tina Johnson did say and ask, can you switch from a term to a permanent?
Yes, you can. Yes, you can. You can convert from a term to a permanent policy. It will be a new policy. So you would basically just begin a whole new policy that will replace the term, but you definitely can convert it either with the same company that you're currently with, or you can shop around and see if you can get a really, really good rate on that permanent policy. And then once you get that policy in place, and I always tell people this, do not cancel your existing policy until that new policy is in place, okay? And that means your first premium has already drafted, okay? Let's be real specific on that. Once your first premium drafts for your new policy, then you can cancel the previous one. That way you don't have a lapse in coverage. But to answer your question, yes, ma'am, you definitely can do that.
All right, fantastic. And Chris Stoudemire said, oh my God, what a wealth of knowledge. And Chris, I agree. Listen, guys, if you have not already, I need for you to go to Ignite's website, www.igniteal.org, and take a look at the Doing Business in Alabama project. And if you find synergy, and I know you will, I need you to register. We are about empowering each other, supporting each other. If we want something different, we have to do something different. And guys, it is so over and beyond time of us talking about it. It is time for us to be about it. And so if you want to see something different in your life, I need you to understand that Demetris and a whole nother slew of professionals are here to serve you. Now, listen, Ignite's Doing Business in Alabama isn't for everybody, because we're about to put the work in, period. As my children say, period. Period. However, I need for you to know that if you're serious about going to the next level, that we've got you. We've got you. And if we don't know it, we're going to go find somebody that does. So without, we don't want to belabor this. This has been great. I want for you guys to definitely stay connected. If nothing else, leave us your email address so that you can receive notifications about amazing programs such as this. Make sure you like us, follow us, and share us on social media, Ignite Alabama. And again, go to www.igniteal.org. And last but not least, meet us next Thursday. Same Facebook page, same time, 11 a.m., different date, but same day. Thursday, 11 a.m. And Demetris is going to continue this conversation. And what is next week's topic going to be?
Oh, girl, next week we're talking about securing collateral loans, girl.
Securing collateral loans. Oh, we about to secure the bag, y'all. We about to secure the bag. I'm excited. All right, so we're going to let y'all go. You got a whole 17 minutes left to do whatever it is you're desiring to do for your lunch. And we will see you next Thursday at 11 a.m. So Thank you so much. And thank you so much, Demetris, for everything that you do.
You're welcome. Thank you.